I'm not sure if you can see it or not. I've got a little bit of a sunburn on my face. I'm working on it. You know, I'd be smart enough to put sunscreen on my kids. Apparently not on myself. I know enough orphan drugs out there. I guess that a little bit of melanoma I'm willing to roll the dice with. So I've greased up my face. And considering I didn't insure my face the way I should have against the harsh UV rays of the light, I've decided to talk about some life insurers. Two, in fact. This is going to be a first for Wall Street Breakdown, as we're going to do two earnings calls in one. Two major Canadian insurers. They announced earnings today. That's Manulife Financial, the biggest Canadian insurer, and Sun Life Financial, the third biggest Canadian insurer. Now, if you were to go into a financial advisor, if you have anybody in your life whatsoever, including yourself, if you're still in that working, I'm not going to get into all of it. You know what? Speak to your financial advisor, but I can assure you that something like life insurance, while I'm going to talk about a few other things I don't like with these companies, despite really good earnings calls from Manulife and Sun Life, I'm not a big fan of investing through companies like these, but investing in companies like these might be a little different. Through companies like these, kind of not my thing, but you know what? Any good financial advisor doing his proper due diligence is going to cover the bases with you on life insurance long before they cover any bases on investing. That's just the way a good financial advisor works. They're making sure that their client is taken care of for any unforeseen anything that might crop up in the future. You can never predict, but I can tell you things will happen. It's best to plan for them. Companies like Manulife Financial and Sun Life Financial, they do an excellent job of ensuring that people are as well taken care of as the insurance they choose to purchase. I suggest purchasing wisely. Anyways, Manulife Financial announced earnings today. EPS came at 57 cents a share. That beat the street by 2 cents. That beat last year's quarter. Last year's quarter was only 40 cents a share, so that's not bad. They attribute a lot of that to growth in Asia. The strong growth in Asia was up 187 million. That's pretty good for Manulife Financial. They're definitely spreading their wings and getting out there. But their investment gains also grew. 154 million. This is where it gets a little sticky for me. Some of the money that they made was from higher fee income, from wealth and asset management business. You know what that means? They're charging you more money. They're charging you more money. They're an MFDA. The fact of the matter is they're selling you a lot of proprietary mutual funds. Those have high MERs. They make a lot of money on that stuff. Just not the way I would go. Do your due diligence and your research. Make sure that when you do sit down with an advisor, they can offer you all the options. Why do I care that you're only an MFDA and you can only give me mutual funds? That's not my problem. That sounds like a your licensing problem, not a my options problem. I want a professional. I want a professional that can do everything. And if he's not the professional that knows specifically what to do, then I want him to know someone who knows that he can refer me to. I don't want a company that's selling a lot of stuff bundled together like everybody else is, making all their money off of fees. That kind of irks me. Manulife is up though. Good for you, Manulife. Good for you. Sun Life is up even better than that. Sun Life was up. Their earnings per share was 93 cents. That beat the street by 4. Last year was 78 cents. So they beat the street and they beat last year. But their earnings per share this quarter, if you take away any kind of one-off items, you exclude any kind of payments they might have had, balloon payments, anything that came due, a bond, corporate bond, something had to be paid out, $1.12. Beat the street by 15 cents. That's remarkable. The street estimated 97 cents. They came in at $1.12. They've missed estimates 2 quarters in a row now. This is a big beat. The CEO mentioned this in the earnings call. He said, investors got to like this. I like this too. You're running a good company. Sun Life Financial and Manulife are great companies. They're well run again. Would I invest in companies similar to this. These companies specifically, please consult your licensed professional financial advisor. But would I invest in companies in this area? Yes, because a lot of people do bring their money to companies like this and allow these companies to do far more work than just insurance. But would I recommend having your broker be one of the guys that work here? Think things through. Do all your due diligence. Keep all your options open. Options are a marvelous thing to have. I don't think Manulife or Sun Life would even let you buy options. I don't know why. You know anything about options? There you go. They missed expectations in 2 straight quarters. And in this quarter, they blew it out of the water. I would say Sun Life and Manulife both had amazing earning calls. Both of them with substantial growth in Asia. Actually, Sun Life mentioned, I think, 77 million in Asia this year versus 68 million in Asia last year. There you go, Canada. 2 of your 3 major insurance providers are doing excellent. Thanks to you. They should definitely be thanking you. They didn't get to the 1 and 3 position if it wasn't for all the Canadians that pay into Manulife and Sun Life. If you use one of these companies, just as an aside, next time you walk into your broker's office or next time he comes to your house and asks you questions about what you want to do this year or where things are going or how the kids are doing, ask him why Manulife made so much money off of fees. Ask why some of those fees aren't then passed back down to you if you've been a client maybe for a long period of time. Or Manulife made money on fees. They made money on a lot of other stuff, doing a good job growing. Pretty limited to be charging all that money. Just my opinion. Please do your research, do your due diligence, speak to a licensed professional financial advisor. Don't take information from me. You don't know that I don't got just beef with the people that work at Manulife. I don't actually have any beef with them. They run an awesome company. I just love options when it comes to being able to invest in different stuff and not have to buy proprietary things that are just kind of under the umbrella of that company, and then they still charge me a whole bunch of money. I don't like paying a bunch of money. I'm trying to make a bunch of money, so paying you a bunch of money doesn't really do me a lot. Manulife, beat on earnings, beat on estimates, beat it all. Sun Life did the same. Growth in Asia. Canada, that's insurance for you.